Hey everybody, Mark Yegi here. And if you like Shopify, I'm going to show you a way to make 1.2, 1.3% for the week using covered calls on Shopify. So stay tuned. All right, so Shopify just reported a great week, great quarter, had good numbers, had a breakout week. If you take a look at this chart here on the screen, you can see that it broke out from about the $50 level, which is a strong level, and it's been in an uptrend for a while. You can see the relative strength rating is 97. I like this company. It's had a big pullback from, 180 down to, went down to like $23, and now it's building cause to go higher. And it's getting rid of all those old sellers, and it's churning through them slowly, but it's methodically going up. And it looks like it just broke through a nice little pivot on some good volume. So if you want to make some income, and we talk about making reliable income in my system called the cash flow machine, then you just look at this chart and go, okay, is this a stock that I want to be in? Remember, we talk about the cornerstones of the cash flow machine. It's the right stock in the right market on the right spot on the chart, and then we squeeze the juice. Now we got the right stock, Shopify. I think it's got some good numbers and all the fundamentals check out, chart checks out, things like that. In the right market, that's a little suspect. So I want to be a little more conservative today in this market. The market's red. It looks like it wants to turn around and go a bit green, but it's a bit red right now. So there's a little bit more headwind. Right spot on the chart. Yeah, it's on a breakout. That's perfect. And then we're going to squeeze the juice. I'm going to show you how we do that. So let's pull up the option chain on the stock. It closed Friday night at 62.03, and I'm making this on Sunday afternoon, which is when I like to make a lot of my videos because things are calm, right? And there's no emotions involved. So you can see the stock closed at 62.03. And then we've got many choices here on this option chain. Now I'm just going to do the weeklies, and I know that the stock peaked, basically at 62.03, and it could certainly pull back this week because, buy the rumor, sell the news is certainly an issue. So I'm going to be a little bit more conservative, but I'm showing you all the way up to the 62, the at the monies. And you can see if you do the 62s, you can make about 2.6% for the week. See at the bottom there? That's where it shows that if you buy the stock and then you sell the call against it for, let's say, $1.80, something like that, you end up making some pretty good juice for the week. Now, 2.5% a week doesn't sound like a lot until you multiply it by 50 weeks. And now you're talking 100% return on a stock if you can do this over and over again. But we're going to be a little bit more conservative. We're going to say, maybe this stock will pull back a couple of bucks this week. Bottom line is the lower we go, the less juice we make, but the more chance we have of having our expected outcome happen. So you can look at all these different prices, and I'm just going to select the 60s because the select 60s, you get about $3 of premium, and a lot of that is juice. In fact, if you look at that, it extrapolates out to about 1.25% or 1.25% for the week. Now, if you invest 1,000 shares, you basically end up making $740 back. So, that's the goal, is that we want to be able to comfortably make a good amount of money. Now, if we can do this over and over again, add those little wins up, it becomes a big win for the year. And, it wasn't too long ago that most interest rate bonds were only paying 1.5%, 2%. So, this is something you get in a week. So what we're going to do is we're going to buy the stock, and I've just pulled up a quick option chain here on Schwab. So it does a good job with these covered call calculator in the money option chains. Really nice to show. And it shows you, if you go down to the 60s, those are the calls, and you see the bid and the ask price. We're going to use the bid price. Let's call it $3, right? $2.99 is $3. And if you do those $3, you end up making back about $740 for the week on your amount of money invested, which is roughly 60 grand, right? So that's very not bad. And if you could do that over and over again, extrapolate it, we're talking about making, 50, 60% a year if you can continue to do this. That's why I love weeklies so much, is because weeklies give you the power to be able to make a little bit more juice during the week than you would make if, say, you did the monthlies. Now, the monthlies are safer, calmer, less emotional, quieter, all that kind of stuff. But you don't get quite the amount of juice that when you go out a month, because there's just not as much excitement and volatility. So I like to sometimes, especially in a stock like this, take advantage of that near-term volatility, and that's why I'm doing this. So looking at the chart looks great. Looking at the stock looks great. Looking at the juice looks great. The only thing that's not perfect is the market. So that's why I'm going a little deeper. I probably could go even deeper, but you start to go too deep, you don't get any juice. It's like, why even do it? What we're going for is if at the end of the week it's over 60, we make the full amount. So I hope you liked that video. We'll see how it does on Friday. Take care. See you next time.